Hey everybody, I am Surbhi and you are watching Key Differences. Today in this video we are going to talk about the differences between money bill and finance bill. So friends, let's get started. Before diving to our main topic of discussion, we will first look into the basics for a better and clearer understanding of the topic. What is a bill? A bill is a draft of proposed law. This means that a proposal for a new law or a proposal for amendment of an existing law is called bill. All the legislative proposals are introduced in Parliament as bills. The bills are broadly classified into two main categories, private member bill and government bill. When a member of Parliament who is not a minister proposes a bill, it is called private member bill, whereas when a member of Parliament who is a minister proposes a bill, it is called government bill. Now coming to the lawmaking procedure. The lawmaking procedure starts with the preparation of a draft, for which the concerned ministry is responsible. As soon as the draft is presented before the parliament, it becomes a bill, and as and when the bill is passed by both the houses of the parliament, that is, the Lok Sabha and the Rajya Sabha, plus the president also gives his assent on the bill, it becomes an act. Besides this, if there is any disagreement or deadlock between the two houses, it must be resolved by way of joint session of parliament. Here it must be noted that the President has the power to give assent or withhold assent, or he can also return the bill, except a money bill, for reconsideration. Now the question is how the law will be created when the Parliament is not in session or when there is an emergency. Then in such cases laws are created by way of ordinances. Money bill. Money bill is a type of financial bill which contains only those matters mentioned in Article 110 of the Constitution. These matters are related to levy, repeal, alteration and regulation of taxes, regulation of government borrowings, custody of consolidated fund and contingency fund, appropriation of money out of consolidated fund of India, declaration of any expenditure charged on CFI, that is Consolidated Fund of India, or increasing the amount of any such expenditure, receipt of money on account of CFI or the public account of India, or the custody or issue of such money, or the audit of accounts of the central and state. Further, those bills containing provisions incidental to these matters will also be regarded as money bill. Here it is to be noted that money bill can only be initiated in the Lok Sabha, that is the lower house of the parliament, on the recommendation of the president. It can be introduced only by a minister. It should be passed in the Lok Sabha by a simple majority of all the members present and voting. After this, the bill is sent to the another house, that is Rajya Sabha, for its recommendation on the bill. The Lok Sabha has the power to reject the recommendations given by Rajya Sabha if it chooses so. If these recommendations are not given within 14 days, the bill is said to be approved by the parliament. So we can say that in case of money bills, the Rajya Sabha has been given virtually no powers, as it can originate only in Lok Sabha after the recommendation of President. Though the bill is sent to the Rajya Sabha also, but even if Rajya Sabha rejects or returns the bill within 14 days, the bill is deemed to be passed. Next, there is no provision of joint sitting in case of money bill. These bills are certified by the Speaker of the Lok Sabha as money bills. Finance bill. Finance bill refers to an ordinary bill introduced every year to put into practice the financial proposals of the government for the forthcoming financial year. We could also say that any bill that is concerned with the revenue and expenditure of the country but not certified by the Speaker of Lok Sabha as money bill is a finance bill. It is a part of union budget specifying the legal amendments necessary for the changes in taxation. It is to be noted that finance bill is an umbrella term that includes all those amendments required in different laws relating to the tax, such as levy of new taxes, modification in the existing tax structure, or continuance of the current tax structure, etc. It covers a bill to put into practice supplementary financial proposals proposed by the finance minister. The bill is approved for one financial year. A finance bill is subjected to the conditions applicable to money bill. It must be enacted within 75 days of its introduction. A finance bill is classified into money bill, finance bill category 1 and Finance Bill Category 2. Coming to the difference between money bill and finance bill. Meaning, a bill is said to be money bill which exclusively deals with the matters prescribed in Article 110 of the Constitution, whereas all the bills which deals with the provisions concerning revenue and expenditure are called finance bills. Next, a money bill can be introduced only in Lok Sabha, whereas a finance bill category 1 can be introduced only in Lok Sabha, but the finance bill category 2 can be introduced in either house of the parliament. Next, recommendation of President. In case of money bill, previous recommendation of President is required. On the other hand, in case of finance bill, category 1, previous recommendation of President is a must. But in case of finance bill category 2, the previous recommendation of President is not required. Next, in case of money bill, the President has the power to approve or reject the bill, whereas in case of finance bill, the President has the power to approve, reject or return the bill for reconsideration. Introduction by private member. As I said, a private member is a member of parliament but not a minister. So, introduction of a money bill by a private member is not allowed, whereas a finance bill can be introduced by a private member. The deadlock situation cannot arise in case of money bill. Conversely, deadlock can take place in case of finance bill, which can be resolved by the joint sitting of the two houses. Power to pass the bill. In case of money bill, only Lok Sabha has the power to pass the bill. That is to say, Rajya Sabha can retain the bill for 14 days and return the same with recommendations. Conversely, in case of finance bill, both the houses have similar powers. That is, the bill must be approved by both the houses of the parliament. So guys, this brings me to the end of this lesson. I hope the concepts has been cleared now. However, if you want to study the topic further in detail, you can visit our official website, that is keyreferences.com. Here you can find a detailed comparison of money bill and finance bill. Along with that, you will find their definitions. Links are also provided in the description box below. I hope you liked this video, and if you did, please do give it a thumbs up and share it with other people. Also, if you are new to this channel and wanna get more such useful videos, consider subscribing this channel and also hit the notification bell next to the subscribe button so that you are notified every time a new video is uploaded on this channel. And if you have any queries or feedback for me, feel free to leave in the comment section below. Until next time, this is me Surbi signing off.